Last Friday, we finally got the breakout that we were expecting. However, there's two price levels that we have to watch right now to make sure this rally sticks. Welcome to the 12-minute trading market minute for Monday, the 9th of January. Here's a daily chart of the S&P 500 futures, and what we're seeing is this volatility coil that the price has been in for about 2.5 weeks, and it created this massive amount of energy. We rarely ever see this amount of energy for any length of time, much less than several days that we had this for last week. So the break that we were talking about, again, it could have gone either direction, to the upside or to the downside. We did feel that there was a lean in the direction of the upside just because there were so many people that were so bearish. And typically when everybody agrees on the same thing, the opposite thing tends to happen in the market. So it looks like for right now, price is heading higher. However, there's some very definite obstacles overhead. The first obstacle would be former support becomes new resistance. So this was a support level for the longest time up here as the price reached into the 4,100 level. Each time it came down to here, this was a support level. So I'm drawing this more as a zone instead of an absolute price. But you can see that since that point, the price has tried to get back up inside of there and has failed. So it's right there knocking on the door again. And that's right around 39.30 to 39.50, and that's on the ES. It's going to be slightly different on the SPX cash index. The next area of challenge is going to be right around the 4,000 level. Again, this is on the ES. You can see the green line represents the 200-day moving average, and also the pink line is the descending trend line for all of these moves, and this goes all the way back to the beginning of 2022. So you can see all of these descending peaks, all of these lower highs link up. So this is going to be a massive confluence of resistance, and this may coincide with this Thursday's CPI reading, which of course is going to be very, very important. Now, the last couple of CPIs that we've had have been real market movers. We've had this one here, which generated a bottom, and we also had this one, I believe it was this one here, this candle created that sort of topping pattern, that shooting star reversal at the top. So we could have another type of strong reaction one way or another coming up this Thursday. We'll take this one step at a time, but for right now, overhead obstacles for the S&P is at about 39.30 on the ES and 4,000. We'll see how the market handles things this week. Thanks for listening, and we'll catch you in the next edition after the CPI comes out on Thursday.